Welcome back. I'm Pratap here. Today is 20th February 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's report. Even before that, a small announcement, please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. So from our home page at our YouTube channel, scroll down to the playlist Supply Demand Zone Price Action course. So click on this playlist. Now here all the training lessons are available in this playlist. I have also provided the link to this playlist in this YouTube video description. By clicking the link, you can directly get into this page. After that, scroll down to the page. There, starting from lesson 1.1, all the training lessons are available in an order. So please go through these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. Please join in the Telegram channel so that it will be helpful to you. Each time when we release a video, we will provide an update in our channel. Now let's get into analysis discussion. Yesterday we have identified 4 high liquidity zones from daily time frame and 75 minutes time frame. Out of these 4, let us evaluate IGL. We got a trade as per a bear trap. This zone is violated. We know that this zone will be violated well in advance because we know we are in a position to identify when a zone will be identified. At least in 90% scenarios, we will be in a position to tell whether the zone will work or it will be violated. So this IGL is a 75 minutes 75 minutes demand zone. Let me go to the 75 minutes time frame. Here we have a rally, base rally, and follow through candles are there. And inside this 75, we fine tune to 15 minutes time frame. So in 15 minutes time frame, we identified 2 zones. This is the first one, rally, base, rally. And this is the second zone. This is rally, base, again a rally candle. These 2 are 15-minute zones. But is it good enough? No. We need to fine tune up to 5 minutes level. So then let us move on to the 5 minutes time frame. In the 5 minutes time frame, look into both the zones. Look into these candles. All these are all leg candles. A medium size leg candle, medium size leg candle. Maybe you may consider this as a base candle, but remaining all are looking like a leg candles. And if you consider this is a leg out and this is the leg in, where is the base candle in between? We have a drop candle is a leg in. We have rally candle is a leg out. So where is the base candle? There is no base candle. If that is the case, this zone will be violated easily. Look into this zone. You have a rally candle, you have a base candle, you have a drop candle, rally, base, drop. And next candle, this rally, base, drop is violated. Now you consider these 2 candles. This is a drop candle and this is a rally candle. In between, where is the base candle? There is no base candle. So that means this zone also will be violated. Previously, once prices at the proximal, type 1 proximal of this entire 75-minute zone, prices entered previously once and this is the second time. But still, there are no new 15-minute zones in this area within this 75 minutes. See today what happened? Prices entered and easily the zone is violated. There was some movement here. The reason is inside this some order flow. Maybe some people might have added some order flow, but that is not good enough to push the prices. Even up to next 15 minutes, next 5 minutes supply zone also it is not good enough. And moreover, here institutions again created a 15 minutes new supply zone here, and further they pushed the prices down, and easily both these 15 minute zones are violated. And when the prices got support, not only these 15 minute zones are violated, even this entire 75 minute zone is also violated here. Okay, because the price is today's close will be above this zone. Maybe we can consider this as a pierced zone. That is only just a terminology. Pierced zones also like violated zones. A small difference, but the characteristics are same. What is that characteristic? Pierced zone or violated zone, all the pending orders in these zones are consumed. There are no more pending orders, previous pending orders. If at all any new zones might be created, and in that new zones, new pending orders will come. That is a different story. But the entire high liquidity is gone because our focus is on high liquidity. And after 75 minute zone is violated, below that there is a 5-minute zone which acted as a bear trap. Why bear trap? Because all the people, whoever brought in this 75-minute zone, they kept their stop loss orders at the digital line, or maybe some buffer they would have added. Once the buffer is also prices reached that buffer, definitely people whoever placed the long orders on this 75-minute zone, what they will do? Because stop loss is hit, they will exit from the long trade. How do they exit? With short orders. Shorts means bears. All these short orders are consumed by the institutions in this 5 minutes demand zone. Because the 5 minutes demand zone consumed all the short orders, that means consumed all the bears. Short orders are nothing but bears. This 5 minute zone is acting as a trap for all those bears. So all those bears are caught here. That's why we are calling it as a bear trap. Institution just created a demand zone and consumed all the short orders. See here, this 5 minutes zone. We have a medium size candle. This is a legging. You have a base candle. You have a rally candle and then follow through candles. Okay, fine. But a 5 minute zone is here. And this 5 minute zone holded the prices today. See, this is a new supply zone they created with a huge, supply. With this huge supply, all these demand zones are 15 minutes demand zones are broken. But whatever the supply, that is not good enough to break this bear trap. How strongly it hold it. Then how it pushed the prices. Not only pushed the prices up, after that even this 15-minute zone is also violated. Supply zone is also violated. But anyway, our target is up to this 15-minute zone. So that way, IGL has given this is as a bear trap. As a 5 minutes bear trap, if you would have taken a trade as per this, because we discussed this bull trap and bear trap several times in our everyday high liquidity zone analysis videos. Anyway, I'll be covering these topics in detail during our training lessons also, during the third phase of our free training program. But the point you need to understand, this 5 minutes bear trap is executed successfully. That way it has given a profit 4,675 rupees, which is 4% return on the investment as per one futures lot. Of course, it is a little lower than our expected target because the 15-minute zone is there. See, there is one more 15-minute zone above this. Here, even prices reach to this 15-minute zone also. Here also there is one more drop, base, drop. This is also prices reached. But always what we do, we consider the immediately available 15 minutes zone. If anybody wants to go for more profit from this. Generally what we do, when if prices reaches near the supply zone, if there is any 5-minute zone, demand zone is here. So those people probably we can use the stop loss. The trailing stop loss. So instead of you book your profit, you have a rally base, rally is there. Here you will keep again rally base, rally is there. See, prices again reached this rally, it didn't violate, it took again further went rally base, rally. Again once again prices reached to this, further went. That day you can take a trailing stop loss and you would have got more profit. Sometimes we use 1 minute, sometimes we instead of 1 minute we have to use only 5 minutes. When you have to use 1 minute trailing stop loss, when you have to use 5 minutes trailing stop loss, you need to have a good experience to differentiate. See, yesterday we used 1 minute trailing stop loss instead of 5 minutes. The reason is yesterday's situation is different. Yesterday's target is very close to the uh, yesterday is a short trade, very close to the supply zone. That's why what we did, and moreover gap is there, pro gap is there. By considering all this, we couldn't defend because to depend on the 5-minute zones, we didn't have enough candles there. That's why we depended on 1 minute candle. But here, by the time prices entered into this, very close to this zone, the 5-minute candles are there. That's why, depending on the situation, you should be in a position to take a decision. But whatever it is, we booked the profit. I mean, we calculated the profit up to this supply zone only, immediately available supply zone. There are other reasons also for that, why we didn't look for trailing stop loss. You may ask a question, why we didn't. See, actually, by the time the leg out is created, we have only, look into this. The moment prices entered into this zone, you can go for drop base rally. But see the entry and in case prices reversed and this is broken, your profit margin will totally reduce. There is no good enough. So that is the reason why we have to limit ourselves to this supply zone itself. See, we can't predict the future. I mean, not predict. I mean, what I mean to say, we can predict the future actually. Predict means based on the probability theory. But you cannot control the future. What is the meaning of control the future? Saying that definitely prices will go up. It will never go down. Will you be in a position to tell by the time prices reach here? Oh, no, we cannot. What we can tell, there is a supply zone, there are higher possibility prices will further go down if this the order flow in the supply zone is very strong. Because we don't have that guarantee, and moreover the drop base rally is not very near to this zone. Already currently for this supply zone itself, the ROI is only 4%. And if you want to consider this drop base rally as your trailing stop loss, if due to any reason prices move down and this drop base rally is violated, then what you won't get anything profit. Whatever the profit you get is almost nothing. Probably you may get 500 rupees or 600 rupees profit. And losing 4,675 rupees profit and getting 500 profit is it is like it is a foolish thing. Maybe let us assume near to this there is a demand zone, near to this zone. And if prices turned out and near to the demand zone is violated, let us assume. And due to that, instead of 4,675 rupees profit, you will get 3,000 rupees profit. Okay, that is acceptable. Okay, you might have lost 1,500 additional profit, but 3,000 is good. compared to 4,675. But compared to 4,675, 500 rupees if you get profit, 500 or 600, that is not good. What I mean to say, at the time when your trailing stop loss hit. So that is the reason why didn't have a chance to take this. After that, a base candle is formed, another base candle is formed, a rally candle, and you got a new target very near to this. By the time you already booked the profit. See, such kind of risk we can take if there is any second trade in this zone, but not in the first zone. See, after seeing the price action, we can easily tell, okay, we would have taken we would have booked a profit here, so that we would have got our 6.1% ROA. We will feel. Anybody can tell after the price action. Before the price action, we have to assess. That is more important. Anyway, all these are all the concepts we are aware. Only thing is your experience only makes the difference where you need to exit or where you need to hold your profits. That is all based on your experience. If you are a beginner, nothing to worry. Once your experience grows, you will be in a position to take better decisions. When you have to use 1 minute trailing stop loss, when you have to use 5 minute stop loss, or when you have to use 15 minutes trailing stop loss. All this kind of understanding automatically you will get once your experience grows. Okay, this is about ICL. Now let us look into the remaining stocks. The first one is Navin Fluorine. This is a high liquidity demand zone we have. And above also we have high liquidity supply zone. Yesterday we found the stock near high liquidity supply zone. When you fine-tuned, you have a 5 minute zone inside, very far away, inside, more deep inside. And one more advantage is this zone is having EMA confluence. And one more point you need to observe, this is in the downtrend. Currently the stock is in the downtrend, and overextension, earlier it has the overextension, price overextension or price overextended. That is what we discussed in our last what to say, in our last training lesson, lesson 17.2. 17, no, not 17, it is 17.4 or 17.3. I didn't remember the number, but the most recent training lesson, we discussed about price overextension or price overextended. So here the price is overextended by the time it reaches into the demand zone. So demand zone now pushed the prices in such a way the overextension will be completed. See, now the overextension is completed. If prices would have entered into this zone today, we would have got a very good trade. Prices entered into the zone, but did not get into this area. Maybe tomorrow it may go or it may not go, that is a different story. But anyway, we cannot take a trade tomorrow on this zone unless our software identifies this zone. Because all these zones are valid for only one day. The previous report is valid only for today. And remaining zones you have to consider or you should not consider. You need experience, good experience. Otherwise, mostly you will be, completely will be messed up. So be careful. But how I fine-tune the zone, that we will discuss. So inside this daily high liquidity zone, we identified a 15-minute zone, 75-minute zone. We have a drop, 2 base candles and drop. So we have drawn 75 minutes zone. Inside the 75 minutes, you should look for 15 minutes zone. We have a rally candle, 1, 2, 3, 4 base candles and a drop candle. Or if you want to consider this is also a, maybe at medium size, some people may say it's not medium, maybe less than a little less than medium. If it is a little less than medium, directly you consider this as a base candle, even though it is completely filled. If you say still, this, you have considered this as a rally, 1, 2, 3, 4, 5, 6 base candles. Either way, you will get a valid zone. But I consider this is a medium candle. See, this is also a medium candle, but here it is having 50% body less than 50%. So it's a base candle. So within this 15-minute zone, we identified a 5-minute zone. See, this is a ERC candle. See, this is a candle, ERC candle, and this candle is bigger than this. See, the range of this candle is bigger than this. Don't say this is a base candle because body is less than 50%. But see the range, it has a big range. That's why consider this as a leg in. We have two base candles and then again a drop candle. That way we have drawn this zone, 5-minute zone. And one more thing, after this zone, look into this price action. This is the leg out. This is a leg out. And then we have follow through candle. After that, see, rally candle, but maybe the order flow is very strong here. It didn't go beyond this. See, the next day again with a gap down, prices came. That means maybe a new order flow is added by the institutions. So that is the reason why we can consider there could be strong order. This is another justification why we can plan a trade in this 5-minute zone. First of all, it is a high liquidity zone, but we have other price action clues that are supporting. We should not miss this 5 minutes. And the risk is also very minimal in this area. Even if something wrong happens, our loss is very, very minimal. But today, unfortunately, prices did not enter into that fine-tuned area. So we didn't get a trade in this stock. And the next stock is Polycab. Polycab is also daily high liquidity zone. It is a drop, base drop. But we didn't plan any trade in this stock. The reason is the 15-minute structure is not good. That's why I stopped my analysis up to 75 minutes, fine tuning. 75 minutes we have a good structure. Let me show you. We have a drop candle, 1, 2, 3, 4 base candles and a drop candle. But the problem is when I shifted to the 15 minutes, I didn't find a comfortable structure in the 15 minutes. So let us look into the 15 minutes time frame. Look into this structure. All these candles, base candles, 1, 2, 3, 4, 5, 6, 7. Lot of consolidation here in this area. So it's not at all comfortable here. I'm not at all comfortable with this price structure. Because I'm not comfortable with this price structure, I didn't even bother about looking into 5 minutes area. See, 15 minutes zone is there, then you have to go to 5 minutes. Without 15 minutes zone, you cannot get into 5 minutes. We can go 5 minutes. By bypassing 15, you can go to 5 minutes when there is a strong price action close. But here, the structure itself is not good. All these many base candles. So that is the reason why I left this. If prices, anyway, prices today did not reach. Otherwise, the zone would have been violated. We have already seen IZL, right? Same thing would have been happened to polycap. There is only one condition. The prices will go down from this zone. That is, if institutions decide to create a new 15 minutes supply zone inside this 75 minutes area. Previously, it happened. We got couple of trades also like that. During the market, what institutions, once price entered here, within this 75 minutes area, institutions created some rally-based drop. Same day again, prices once again retraced to that area. Now we took the trade. Because there is a fresh 15-minute zone. Inside the 5-minute zone structure is also good. We took the trade. Recently happened, I think maybe, I didn't remember, maybe in within 2 or 3 trading sessions, one of the trading sessions we took a trade. Even last week also, one trade we got similar way. But anyway, today prices did not enter. If institutions don't create a new fresh supply zone inside this 75, otherwise it will be violated easily. Same thing IGL also happened. The moment prices entered into that 15 minutes zone, institutions did not create any new fresh zones inside that area. So easily IGL is violated. But below that there is a bear trap which has given a trade. And the last one is Tata Power. Tata Power is a 75 minutes high liquidity supply zone. We have a drop candle, 1, 2, 3, 4 base candles, again a drop candle. Inside we identified a 15 minutes. Inside 15 we identified a 5-minute zone. Let us look into them. The 15-minute zone, this is how I have written. This is a drop candle, 3 base candles, again a drop candle. Don't consider this is a rally candle. This is a drop candle because there is a hidden body. Generally such kind of zones work, the zones having hidden body, that is invisible zones. They have good success in general. And moreover, there is a pro gap area. From the zone, gap is created. So we can consider this as a pro gap also. Now let's go to the 5 minutes time frame. How we fine tuned within the 15 minutes area. I consider this as a ERC candle because the length of the candle is almost the same as or even a little higher than this leg out candle because it is having a huge body and it is not a medium size candle. So that is the reason why this entire candle is considered as leg-in. That is ERC candle and leg-in. Next we have a short candle, base candle, and then we have a drop candle. And after that, see, prices try to enter into this area. Maybe the order flow is very strong. Again, it pushed the prices down. The next candle with the gap down, further prices went down, and there is a move towards the down. That means the push is very good from this zone. So we have a price action clue. That means near to the zone, just before the 5-minute zone, there was a strong order flow. So that's why we are thinking maybe there could be higher chances of getting a success in this 5 minutes time area. But today, prices did not enter into this zone. We did not get the trade. So these are the high liquidity zones generated yesterday, but only one trade, that too as a bear trap just below the 75 minutes high liquidity zone. So this is about the analysis part. Hope this explanation will be useful to you. Let us all meet again in our next video. Thank you.